Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning. Welcome to the morning brief. Today is February 3rd, Friday. Boy, I'm glad it's Friday. Take a look, and my computer class is finally over. Back to normal trading today. Of course, today is going to be a wild day. The Fed came out, I should say the numbers came out of here at 8:30. Average hourly earnings came in as expected. That was the good news. That's the best news of the day. 0.3% non-farm employment change. NFP came in at 517,000 versus an expected 193,000. And the previous month was upgraded to 260,000. So what does that mean? That means that the market did not like that number. Why? Because the unemployment rate dropped from 3.6 to, which was the expected. Last time it was 3.5. Expected was 3.6, 3.4 unemployment rate. So again, what does this say? It says that Wednesday the Fed should have raised rates 50 basis points instead of 25, and that there's going to be more rate hikes in the future, probably in March and June. As the Fed continues to have to kind of pump the brakes a little bit on this hot employment market. At 9:45 we have final services PMI, and at 10 o'clock we have ISM services PMI. It is a red item, so that's the next thing to watch next. So wild, and thing is that the expectations were actually for a worse number. The shadow number was for a worse number. They really did not do so well. And this bodes to the more tightening, more interest rate hikes, etc. And that's why the market doesn't like it. Looking at the daily chart here, you can see we are now gapping down substantially. Going to easily probably take out the lows from yesterday. I would say 41.21 is definitely within range, and we could see back into the top side of the box here, 41.09. I could even see 4100 if we can get some legs to this downside. Ugly number. Taking a look at the inventory. Whoops. Get that out of the way. Come on now. Get that out of the way. Inventory yesterday. Here we go. We closed at a positive 1,400, and yes, the market was up yesterday pretty significantly. So these two are correlated. You can see though that this is from 10 o'clock in the morning all the way to the close was selling even into this big run up. Again, I think that this is the smart money moving to the sidelines in anticipation of the NFP number today. And likely so, those guys were the smart ones getting out yesterday afternoon sometime. That being said, this morning we're obviously down and inventory is down. I can't see us not having some sort of more of a sell-off today. Ugly Friday is what it is. Looking at the intraday chart, this is a 7-minute chart of the ES. You can see here's that 830 number. Market just absolutely hated it. It tried to bounce, but it then took out the low again, and it is flirting down here at the 4140 area. And it would not surprise me to see continued selling as realization kicks in. The employment market is extremely strong, and the Fed is probably going to have to continue to raise rates. We'll see how that all plays out. Stock Traders Almanac for Friday today is only 42.9. So it's a negative expectancy historically for today. That's from the Stock Traders Almanac 42.9. Hope you guys have a great weekend, and I'll see you on Monday. I am going to try to do a video over the weekend, basically going through the reasons and what we're looking for during these morning briefs. What is the morning routine and why we do it? So watch for that. Hope you guys have a great weekend. See you Monday.